One blog post erased $589 billion from a single company in one day. One rumor about a Dutch machine erased Samsung's best trading day in almost 20 years, in the other direction. This is the AI chip war, and depending on how you count it, it has already moved more money than most actual wars cost to fight. Nvidia builds the chips almost every frontier AI model runs on. AMD is closing in faster than anyone expected, and China is quietly building an entire parallel chip industry behind a wall the US built to keep them out. By the end of this video, you'll know exactly who's winning and why the answer isn't as simple as the biggest company. Here's why this matters more than a normal tech rivalry. Every large AI model, the ones writing your code, generating your images, running your customer service bots, is trained and served on specialized chips, not regular processors. Chips built specifically to do the matrix math neural networks need, millions of times a second. Whoever controls the supply of those chips controls the actual pace of AI progress, how fast models get built, how cheap they get to run, and which countries get to compete at all. That's not hyperbole. It's why a single earnings call from Nvidia can move global markets, and why a single export control memo out of Washington can reshape an entire industry overnight. Let's start with who's actually on top, because it's not close. Nvidia is worth roughly $5.1 trillion, the most valuable company on Earth, trading blows with Apple for the top spot. It controls somewhere around 86% of the AI accelerator market, a number that has barely moved even as competitors ramp up. Its current flagship, the Blackwell Ultra, is the chip nearly every major AI lab either owns or is desperately trying to buy more of. In one quarter alone, Nvidia's data center business pulled in $39 billion, more than 6 times what its closest rival made in the same period. That's not a company leading a market, that's a company that for now, basically is the market. But AMD isn't sitting still. Its Instinct MI350 is built on a more advanced process than Nvidia's chip, and it actually ships with more memory, 288 gigabytes, 1.5 times what Nvidia's B200 originally offered. That memory advantage matters enormously for running huge models, and it's a big reason Nvidia rushed out a bigger memory Blackwell Ultra to catch up. AMD's data center revenue grew 57% year over year, the fastest growth of the two by far, even if it's still starting from a much smaller base. Its actual market share climbed from under 1% to somewhere in the 5 to 7% range in about a year. That's not victory, but it's the fastest anyone has closed on Nvidia in this entire AI boom. Here's the part hardware specs don't tell you. Chips don't run themselves. Nvidia's real advantage isn't just silicon, it's CUDA, 18+ years of software libraries so deeply optimized that almost every AI framework on Earth was effectively built around it first. Millions of developers already know it. AMD's answer is ROCm, an open alternative that's improved dramatically. It now runs natively on Windows and plugs directly into PyTorch on day one of a release. It's also 15 to 40% cheaper to run. But CUDA still outperforms it by 10 to 30% in most head-to-head tests, purely from years of accumulated optimization. And underneath both of them sits Vulkan, the portable, vendor-neutral compute standard that runs on almost anything but gives up performance for that portability. Software, not silicon, is the actual moat. Now, the first crash. January 2025. A Chinese lab called DeepSeek released a model that reportedly matched Western performance at a fraction of the training cost. A blogger wrote a 12,000-word post making the case that this broke Nvidia's entire growth story. If AI gets that much more efficient, maybe you don't need as many chips after all. That post got shared by a venture capitalist with over 1 million followers. Within a single trading day, Nvidia lost $589 billion in market value, the largest single-day loss any company has ever recorded. Not because Nvidia's chips got worse, because the market suddenly wasn't sure it needed as many of them. So why doesn't China just buy Nvidia's best chips and skip all this? Because it's not allowed to, and the rules keep changing. 2022, the US bans Nvidia's top chips from China outright. Nvidia ships downgraded versions instead. Early 2025, even those get restricted. April, the loophole closes completely. Nvidia writes down $4.5 billion in chips it now can't sell. Then the whiplash. By December 2025, the policy reverses and China can buy Nvidia's H200 again, with a 25% surcharge attached. By this year, the rule shifted again, to case-by-case approval with volume caps and identity checks. 4 policy reversals in 4 years. If you're trying to plan a chip strategy for your country, you're planning around a rulebook that gets rewritten every few months. So China built its own supply chain instead of waiting. Huawei is aiming to roughly double its Ascend chip output this year. Around 600,000 of its 910C chips, scaling toward 1.6 million dies across its whole lineup. Cambricon is targeting 500,000 accelerators, mostly made domestically. On paper, they're behind. Independent research suggests a single Ascend 910C delivers around 60% of an Nvidia H100's inference performance and roughly a third of a B200's raw compute. China's top foundry, SMA, is still stuck at 7 nanometers, while Nvidia and AMD are already on 3. But behind and irrelevant are different things. Domestically made chips already cover something like a quarter to two-fifths of China's own AI chip market, and that share is climbing every year. Here's the twist nobody expected. Individually, Huawei's chip loses badly. But Huawei doesn't compete chip versus chip. It competes system versus system. Its Cloud Matrix cluster links 384 of those weaker chips together, and the combined system delivers roughly 300 petaflops of compute, more than Nvidia's flagship rack-scale system, the GB200 NVL72, which tops out around 180. More memory too, over 3 times as much in aggregate. The trade-off is efficiency. Huawei's approach burns something like 2 times more power for that output. But if you're a country that's been cut off from the best individual chips, brute-forcing scale with good enough hardware is a completely viable way to stay in the race. Here's the actual choke point behind this entire war, and it's not Nvidia, AMD, or Huawei. It's a Dutch company most people have never heard of, ASML. They make the only machines on Earth capable of extreme ultraviolet lithography, the process required to etch the smallest, most advanced chips. Every single advanced chip maker, TSMC included, has to buy from them, because there is no second supplier. That's the actual reason China is stuck at 7 nanometers while everyone else moves to 3. It's not a talent gap, it's that the US and its allies simply won't let ASML sell its most advanced machines into China. One company, in one small country, controls the physical bottleneck for the entire global AI industry. That's the real center of this war. Which brings us to the second crash, and it just happened. In June 2026, South Korea's stock market hit a record high, riding the AI boom. By late July, it had plunged so hard it wiped out the entire rally. The trigger: reports that Chinese companies were making real progress on their own domestic lithography equipment, the exact kind of machine ASML has a monopoly on. Just the possibility that China might someday route around that choke point sent Samsung down 13.4% in a single day, its worst one-day fall in almost 2 decades. SK Hynix dropped nearly 15% alongside it. Same story as the DeepSeek crash, different country, different chip. The market doesn't need proof, it just needs a credible rumor that the chip supply chain might shift, and trillions move before lunch. Zoom out, and this isn't 2 isolated incidents, it's a pattern that's going to keep repeating. Every time there's even a hint that AI might need fewer chips, or that someone might make chips without needing the usual gatekeepers, markets built on the assumption of endless chip demand flinch hard. That's what chip requirement frenzy actually means. Valuations across the entire AI supply chain are priced for a very specific, very fragile story to keep being true. When that story wobbles, even briefly, hundreds of billions move in hours. This is probably not the last time you'll see a headline like this. It's becoming a recurring feature of how AI markets work, not a one-time shock. A few honest caveats before the verdict. Market share, revenue, and market cap numbers in this video are recent snapshots, not fixed facts. They shift by the quarter, sometimes by the week. Export control policy has already reversed itself 4 times in 4 years, and there's no reason to assume it's done moving. And benchmark comparisons between chips depend heavily on which workload you test. Inference numbers and training numbers can tell very different stories. Treat every number here as true as of when this was researched, not as a permanent scoreboard. Verify the current numbers before you make any decision that depends on them. So, who's actually winning? By almost every conventional measure, Nvidia still is. Highest revenue, highest market share, the best individual chip, and a software moat competitors still haven't closed. AMD is the fastest closing challenger the West has produced, and if you're buying hardware today, it's the most credible alternative on the table. China isn't really running the same race at all. Cut off from the best individual chips, it's building an entire parallel ecosystem optimized for self-sufficiency instead of raw performance. And ironically, the export bans designed to slow China down are the exact reason that parallel ecosystem now exists at scale. Nvidia is on top today. But on top in this industry has never once meant permanently. Here's why you should actually care, beyond the stock tickers. Every one of these companies winning ground means more competition, which historically means cheaper, more available compute for everyone downstream, including you, if you've ever thought about running an open model on your own hardware, like we covered in an earlier video. A more contested chip market is, weirdly, good news for anyone who wants AI to stay accessible instead of gatekept by whoever wins outright. Watch the chip war less like a sports rivalry, and more like the plumbing that decides how expensive, or how open, the next decade of AI actually turns out to be. That's the chip war. Nvidia on top, AMD closing fast, and China building its own path around a bottleneck one Dutch company controls. All the sources and numbers are linked in the description. Follow for more of these breakdowns.